Good day from wherever you are joining this call tonight. Let me say a big welcome to everyone, those joining us within Nigeria and those joining us from outside Nigeria. Yeah, thank you for hopping on the call, okay? So like you have on my screen, we're going to be talking about structured trading. It's going to be a 2 hour section. I want to make sure within these 2 hours, I want to just show you how you should approach the chart, okay? That's basically what I want to speak about tonight, how you should approach the chart. So we'll be speaking about structure trading. So you have your friends, you have your colleagues, you have your family members you want to send this link to. I think this is the best time to do so. Let them have the link, let them jump on, let them just listen to us. This might be the call that will piece all the whole information they know about Forex together. This might be that one call that could give them a clue of doing the right thing. All right, so just help us by sharing the link. Let me start by saying Forex is very difficult. It's not so easy as you may have had. All right, that's a fact. It's very difficult. It's going to take a while before you start understanding what the chart is talking about. It's going to take a while. It's going to take some time before you begin to understand what this whole chart thing is all about. But the easiest way to approach Forex trading is to trade structure. Structure trading is the best form. This is my opinion. I might not be correct. It might not be 100%, but in my opinion, structure trading is the best way to approach the chart. Okay, so by structure, you're able to identify the history of price, what price is doing at the moment, what price has done before. Then you can make a forecast of what price will do. Okay, so if we are bullish, for instance, you want to see an established trend. Okay, like I taught in the last class, you want to see an established trend. That's why I will tell you it must be series of higher highs and higher lows. Series. So it's not just maybe a one move. No. It's not a one move per se. No, it must be series. Series. So you have an established low, an established high, an established low. So you want to call that series of higher highs and higher lows. Then if price is bearish, you want to keep seeing price giving you all of this momentum to the downside. You want to see price giving you that momentum to the downside. So if we are bullish, this is what you would want to see. You want to see an established trend. Price giving you series of highs, giving you series of lows. And then I've said it that the lows, all the lows and all the highs are liquidity points, which price is going to be attracted to. Okay, all the highs will be liquidity points. All the lows will be liquidity points. So if we are bullish, you want to be looking to take only the highs. So you see price constantly taking the highs. So price come here, didn't take this low, took this high. Price came back and price went and took this high. So above is buy side liquidity. Below we have the sell side liquidities. Okay, so all these structural zones are all liquidities. Price can come and take them. So you want to be careful when price is approaching your zone. You do not want to just jump in on the trade. No, you want to be careful. Allow the model to show itself before you want to engage your trades. That's structured trading. It is your model that tells you price has actually aligned with the structure from the time frame you are looking at the structure. So assuming I'm looking at a weekly structure, I want to see my model play out on the 4 hours because that is the correlating time frame. Okay, that is the correlating time frame. I have a video on time frame analysis. Sorry, excuse me. So you want to check out the correlating time frame to be able to see your model. So if, for instance, you are a trend line trader, you want to see those touches and those rejections around your structural zone. Are you getting it now? You want to ensure you are seeing the touches around your structural zone or the rejections around your structural zone. If you're a candlestick pattern trader, you want to see either a pin bar or a bullish engulfing around your structural zone. There must be a model you are looking out to trade. All right, and if you're an indicator trader, you want to see either the cross of the MA or the indicators showing or the RSI. You want to just see something that is your entry model play out within your structural zone. So if we are bullish, I want to be looking for that model here. If we are bullish, I want to be looking for that model here. If price remains bullish, I want to look for that model here. So anytime price goes up, I want to be patient enough to allow price come to this zone. Okay, I want to allow price come to all of this zone. So price can take time to come in there, but I want to make sure I'm waiting for that model around my structural zone if we are bullish. And now if we are bearish, we want to see price do the same thing. We are bearish, so price will have to establish first a clear of all the lows being taken out, all these lows, the liquidities resting here, the sell side liquidity is being taken out. So anytime I want to get in, I want to wait for a push to my structural zone or a push to the next region where I'm waiting for price to sell. I'm taking it gradually so that you are writing something, you can write, you are screenshotting, you want to screenshot the chart, you can just do that. So that's why I'm taking it step by step. This is structure trading. And I said, in my opinion, is the best because you want to keep following the trend. Since you are not the one moving the market, you want to follow price action, strictly price action. So what I recommend personally is that if you want to trade structure, you must start your analysis from the higher time frame. All right, you must start your analysis from the higher time frame. So my higher time frame is weekly, and then is weekly is 4 hours, which is my H4, and M30 as my entry model. M30 becomes my entry time frame. So to me, this is what my higher time frame looks like. Weekly, what is this structure on the weekly? I want to see this bullish structure on the weekly or a bearish structure on the weekly. So when price comes to this zone, which is my last bullish move, it might be the order block, it might be the fair value gap, all right? It might be the order block or the fair value gap. You can check out my other videos in the YouTube too. I've spoken about fair value gap, I've spoken about order block, all right? So price comes in there, you want to see your model on 4 hours. So if you are waiting for candle rejection, for instance, You want to see price come into that zone, and price gives you something like this. Okay, you want to see price give you something like this. A situation where price sell lower and price pushes higher, buys up and give you a candle rejection, which we are going to be calling maybe a pin bar. And you just want to see that rejection of multiple candles, certainly not one. Certainly not one. You want to see that rejection. Okay, you want to see all that rejection happening around your zone of interest. So when you keep seeing those rejection, if that is your model, if you are a candlestick trader, then you want to get in on this rejection at the zone only. So if you are seeing rejections around this area, you are seeing rejections around this area within the range, you don't want to get trapped within the range. You want to ensure you are waiting for price to come to that zone of interest. Then when price comes there, gives you that model on 4 hours, then you want to see a 30 minutes entry. Okay, a 30 minutes entry if you are using the weekly. So 4 hours to 30 minutes. Okay, so even if we are bearish, it's the same thing. Even if we are bearish, it's the same thing. You want to ensure that when price returns to your zone of interest on a weekly, you want to see a 4 hours model. A 4 hours model. Now, what is the model that we trade in the Smart Traders Network? Our model is simple. We want to see price gives us a sweep of liquidity, which is the clear of the previous low, a break in market structure, and price coming back for a retest. This is the model we want to see. This is the model we want to see. This is the model we want to see on the 4 hours. We want to see price giving us liquidity sweep, which is a sweep of previous buyers or sellers, and then price clearly breaking structure. That's price clearly breaking the previous high or the previous low. Okay, that's a model that we trade in the Smart Traders Network. So we have a clear BMS, and then we want to see price come back for the liquidity, and then that becomes your entry. We want to see price come back for that liquidity. So here becomes your entry. So this is what we want to see. Yeah, something like this. So this is what we want to see. So price comes, when price is retracing, for instance, price comes and give you this break of structure after price has taken the previous buyers. So that's liquidity is taking. Okay, price takes it, break above, and price comes to either a fair value gap here or coming to just take out the liquidity, and price runs off. So it's something like this that we want to see. Something like this we want to see. So if you want to take screenshots, you can go ahead, but this remains the model that we trade in line with structure. So if price is bullish, you want to see that retracement gives you this kind of model. It takes time for it to form. Yes, it takes time. It takes time, but you have to wait for this model to play out before you want to engage. Also, if we are bearish, it's the same thing. Once we are bearish, you want to see price create this high, give this low, and price rallied above it, taking out the previous sellers, and price coming to break the previous structural low. So once this structural low has been broken, you want to see price return back to this. Price coming to take out liquidity. Price comes here, takes liquidity, trade into either a fair value gap or an order block, and then price rallies in the direction of the higher time frame. All right, price now go in the direction of the higher time frame. So if you have taken screenshot of this, can you help me post in the group? Please help me post in the Telegram group, all right, for us to be able to have access. All right, we're 26 on the call. I appreciate you guys. Thank you for your time. For those joining us from other countries, thank you for your time. I know how tough it is for you to be able to hop on the call. Oh, Mr. Tony is here, my friend. Thank you for your time. God bless you. All right, so this is the structure you want to keep in mind. My higher time frame is weekly. From weekly, we want to move down to the 4 hours. You want to see this model on the 4 hours. You want to see this model on the 4 hours. All right, and then entry model, you can now make use of the 30 minutes. So I'm going to allow you to ask just maybe 1 or 2 questions, then we go to the chart so that we see how this model is applicable on the chart. Because you see, backtesting is very important. You can't do without backtesting. Backtesting tells you how these things play out. And then forward testing now gives you anticipation of what should play out. All right, so while backtesting helps you to master the strategy, forward testing gives you confidence. Are you getting it now? So we're going to go through some assets, we backtest them. Then after that, you can now forward test them. Copy out, okay, this is what I'm expecting. After 2, 4, 1 week or some weeks, come back to it. Did it play out? If it does, it boosts your confidence. So when you see these repeated patterns happen again and again, you are no longer moved. You know that, okay, this is what is going to happen. So if you can do a forward test of about 10 different assets, 10 different charts, and you have 6, 7 play out, you are already a good trader. It doesn't matter whether you've been there for 2 years, 5 years, 10 years, it really doesn't matter, or 1 month. If you can do a forward testing of 10 assets or 10 setup and you have 6 play out, that's good. You are good to go. You can take a funded account, you can fund your own account. So we're going to do a lot of back testing tonight. So let me allow you ask a question. Mr. Zhang, I think I would prefer you just drop the question so that I wouldn't want, just type in the question, all right? Just type it in so that I can go through it. Because if I want to unmute you now, to have about 29, 30 persons unmuted, the audio is going to be disrupted. So let's see if we can just type it in the Telegram group. I'll be able to, from there, just answer it. All right, guys, thank you. I've seen your screenshot. Thank you, guys. Thank you. So while we are waiting for that, let's go to, would I need to take out this? All right, let's just move it out. So this is my weekly chart, this Euro USD. Yeah, I will show the model for lower time frame. I'll do that. All right, I'll do that. So this is Euro USD weekly chart. Okay, so like I said, you want to be able to know where price is coming from. That's the history. Price action. What's the history of price? What has price been doing over time? Over time. So without even going that far, you will see if I pitch my screen together, you see that when price gave this high, I think I should do this. When price gave this high, price gave this low, and price gave a higher high. Price gave all of this high. And since then, look at what price has been doing. Price has been giving us this pattern. This pattern. So you see, price is trading lower, consistent lows. That's what price has been doing. So I can say we are bearish. and you can see that we are actually bearish. Price is still trading lower, taking the lows. Price kept clearing the lows. All the lows were being cleared. So last high, and this is the last low that was formed. After price gave this, gave all of this, and then price gave this high. So right now, there are two things you want to consider. Now we have established we are bearish. But yeah, we are bearish. You can see that price started giving like a retracement here. Now you want to check out the current high. So let me mark out the current high. This is the last high created. Last high created, last low. So we're expecting that price should take out this low. Price will not necessarily take out the high. Then we also have what we call the premium and the discount zone. So that's my Fibonacci retracement to from 50 and below is discount. That's where you want to look for buy opportunities. This discount price. All right. And 50 and above, it's your premium zone. So for premium zone, you want to look for selling opportunities at premium. Want to look for selling opportunities at premium zone. So that's premium zone. 50% above, you want to sell. 50% below, you want to look for buying opportunities. So if I bring up my Fibonacci, put it on the last high, and bring it to the low, what will you discover? Price is already at the 50% region. So since price is at the 50% region, I want to see this model. I want to see this model. This is the model I want to now look out for. Because price is bullish on this retracement. You can see this retracement, this was buying, it was bullish. Candles kept pushing higher. But for me to know that price wants to go bearish, to continue the weekly trend, I want to see this model play out again. You get it now? I want to see this model play out again. So you come to this zone, you see that price at 50%, which is your premium zone, price gave that weekly model. Price gave that weekly model. Look at it, price ran up, price cleared these people. So this is my liquidity sweep. And price broke here and broke here. So immediately price broke two structural points. You can see clearly that the candle closed below. So if I remove this, I like clean chart, all right? So price swept liquidity, the exact model I drew just now. Price broke this low and price broke this low, because this was the structure, a low, a high, a higher high, higher low, higher high, and price rallied down, breaking this zone, these two zones. All right, so that gives me a confirmation that we want to go bearish. Now that we are bearish, I'm expecting that if price, like the model I drew here, once price break, we expect that price should come back to give us like a retest. Okay, after price break the high, you see price came back here, and then we get entry here. The same thing is what you will find at this zone. So when price broke, you expect price to come back. So when price came back, you can see how clearly price came into a fair value gap. You can see that very clear. Price came into this fair value gap. Remember I said that price can either come to an order block or price can come to a fair value gap. I said that earlier, all right? So you can check out other videos to know what a fair value gap is or an order block. And most of the persons I've seen on this call are not new, so those materials are there, all right? We have price return back here. So from here is where you would have been looking for your short entries. Now that price has come here on the weekly, price came back to the fair value gap. I said that you want to see price give you this model on a 4 hours. Remember I said so. Price should give you this model on a 4 hours, which is the correlating time frame of the 4 hours. Now that price return back to the fair value gap, I want to see the break of structure on the 4 hours. So if we go to the 4 hours, we should see that break of structure here when price came to the fair value gap to further strengthen our bias. All right, so let's head to the 4 hours. Let's see. Let's see, that's the fair value gap there. So I want to see price give me the same model, a high, a low. Price rallied up, and you see what price did. Price rallied lower, and price gave us a break. Price gave us a break. This is 4 hours. Price rallied up, gave us that break. Now, when price gave us that break, we are expecting a retest. Now, the retest we should be expecting is that price should come and take out these equal highs. Okay, price should come and take out these equal highs. Price broke structure, created another range. Watch, price broke structure. Look at what price did. After breaking structure, price created this low, created this high, and price left. So this zone become valid. All right, this zone become valid because price came back, just retested the line. You can see how that price retested all of this zone. All of this zone was retested. Though we have equal highs here, okay? Someday price will come back there, and then we can just continue to maybe get entry at the fair value gap around this zone. All right. But for now, look at the structure that price gave. Price gave another defined range. I already told us what a defined range is. Defined range is that price will sweep liquidity. As you can see, look at all of these. Price took them out. This is a sweep of liquidity, and price broke. Price broke lower. Please just follow me gradually. So you see, price broke. So now that price has broken lower, what are we expecting? We expect price to return. And that was why price came back here, and price sold beautifully. But I was waiting for price to come into all of this. I shared this in the last video. Yeah, I shared this in the last video that price should come back to this zone. This is what we are waiting for price. But price played here and price dropped. I advise you stay. You can see these equal lows here. This week and this week, that's liquidity. Price left it because it wants to come back for it. Price left this equal highs because price wants to come back for it. And above the equal highs, you can see a fair value gap here. This is a fair value gap. You can see it. It's clear. So I expect that price should push back into this zone. But if price takes this equal lows tomorrow, then this will be a good place for price to return back to. Price might just return back to this place and we keep being bearish. Okay, that's why I put it like this. Price takes this low, and then we'll just return to maybe this zone, and then we push lower. But if price just keep being bullish right now, price might come back to all of this zone because we have these equal highs here, and price will not go without taking those highs. Price will not. No, price will not do that.